and we're talking about this idea of why Wall Street used to hate annuities, but why all of a sudden they tend to love them. And referenced in this was an article dealing with the fact that research, whoever these researchers are, something we've known for years, has all of a sudden uncovered this particular fact about savers. Listen closely. Since we know that annuities are the only guaranteed income source that's available, other than pensions and Social Security, they've noticed that as people have more mailbox money, they have permission, as I like to say, they have permission to spend more of their money. Now, why would they feel like they can spend more money now versus later? Because they know with mailbox money, they're not going to run out of money. And that is not opinion, folks. That isn't a fact. We are talking a lot about opinions here, and we have to admit that all of us in the financial world base our opinions on experience, emotions, how our clients' money turns out, how we've been trained. All of those things build into those opinions. And of course, I'm sharing my opinions on things today. But the one thing that is a fact today is that annuities are the only source of guaranteed income. Now, I want to go to something. We've covered this before. It's called the 4 different financial worlds out there. And these are the main places, for most consumers anyway, where you have to make a decision on putting your money with them. So let's go over the 4 financial institutions. I'm going to explain where I'm going with this and how it relates to the guaranteed lifetime income. Well, first of all, we have banks. Now, banks serve a wonderful purpose in our society. And banks provide as their main products for retirement for these savers that we work with would either be savings, CDs, or money market accounts. Again, their goal is principal protection with a reasonable amount of interest. And as again, we record this show in 2024, paying a decent amount of interest. Now, what's interesting about that, through our Charles Schwab platform, we can find for our clients bank CDs and bank money markets. We can offer these products for a fee. We cover this and do this for people all the time. So we know, we have a working knowledge of bank products. The next product that you might get, obviously these products come from Wall Street. These would be certain types of bonds. These would be stocks, mutual funds, ETFs. Again, what's highly unusual about Tony Walker Financial, in our opinion, there are times when we will use these products from Wall Street. Folks, we don't hate Wall Street. Some of you might think I do because I'm always kind of giving them a rough time. The only thing that bugs me about Wall Street is why they won't admit that products all fit the bill for different people. This is why we offer so many different types of products at Tony Walker Financial. We know not everybody's alike. So yes, we can get through Charles Schwab stocks, bonds, mutual funds, and ETFs and long-term bonds. The third institution, this might surprise you, is the government. And you say, well, what do you get to get from the government? Folks, government bonds, which we highly recommend for savers, those are obviously issued and backed by the full faith and credit of the government. The government, while they're not paying huge interest rates right now, a lot of people still like government bonds because of their safety and security. And yes, through Tony Walker Financial, through our Charles Schwab platform, we buy a lot of government bonds for our clients. So you see where I'm going with this. What we're saying is, folks, there is no perfect product. All these products can fit, assuming you have a well-managed and well-orchestrated game plan, which is what we provide our clients. And finally, let's spend a little time on this, insurance companies. So another reason Wall Street has never really liked annuities is because annuities are not issued by Wall Street, they're issued by insurance companies. These are contracts. And up until recently, insurance companies did not offer products that were fee-based. In other words, if you sold an annuity, which we sell annuities, generally, they've always paid traditionally to the agent. That would be us in this case. If you bought an annuity through us, the insurance company would pay our commission. Now, the reason Wall Street doesn't like that, they don't mind taking a commission, but if they take a one-time commission, they're one and done. They don't get to have recurring fees coming in off that annuity. Now that annuities are fee-based and they figured out how Wall Street can come in and charge annual fees, this is one of the reasons, in my humble opinion, that Wall Street is pushing annuities. Number one, they're losing a lot of money to insurance companies. They don't like that. And number two, they couldn't figure out how to charge recurring fees on annuities, which now they can. So you might be saying, well, what's the point of all this, Tony? The point is, folks, in our opinion, any of these products or possibly all of these products could be beneficial to you. But the only way we're going to know if we can find out is we got to talk. And we made this so easy. We call it the free 10-minute fiduciary phone call to talk with me personally about your situation to see what might be right for you. If you're retired or retiring soon, let's talk.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.